The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I am your host, Darrell Martin, right here on TFNN.com. Don't forget you can listen to us on Tiger TV and see our screens right there on TFNN.com, and you can hear 9 hours of live radio trader commentary every day on your mobile phone anywhere you are at TFNN.mobi. So let's check out the market. Let's see where things are at right now and pull it all up, put it together, and see what's going on with the news. Don't forget, we do have an FOMC meeting minutes report coming out here at 2 o'clock. I've had a little bit of, there's been a few FOMC, conversations today. Most of them have not just been massive, but it's caused some nice volatility in the markets, giving you plenty of opportunity to make a little cash. So hopefully you've been fortunate enough to be able to take advantage of that. And I'll pull up a couple charts for you. Here we got the Russell right here. And started off pretty strong. Ran on up this morning, pulled on back. Basically filled in the gap here. So you can see right here we hesitated a little bit, pulled on back, and now we're reversing on back up going into the minutes release. I can zoom that in for a little bit easier, make it a little easier for you to see. But just a sort of an oscillation day as of this moment. We'll see how it ends up. But we got a report coming out, the minutes coming out at 2 o'clock, give a further insight to the reasons, the decisions behind the interest rates and what they were looking at, therefore a little clue what they are looking at going forward. But the real thing is they'll be looking how they changed certain reports, like did anybody change their stance, or is their phrasing where they changed like 3 words. I mean, it's insane. They literally these algos go and they pull like the 3 words that were different. Okay, it's like, oh, they went from is progressing to looks like it might be progressing. And that's the whole thing that's coming out. So often the minutes, unless there's a surprise, don't have a big impact. But the market's being at the highs they've been, the VIX doing what it's been doing. Who knows? Just be cautious going into the report. We'll go ahead. Let's pull up a little VIX analysis right now, see how it's doing on its seasonality in comparison to everything else. So I'm going to go ahead and throw this up there. We're going to put up the VIX on it. And I was showing this the other day. We've been dropping back down again. We start running back up, so we're still due for a pretty nice drop on it. But let me show you what I mean. And I'm gonna go in here. We're gonna pull up a seasonality on this. We were down, and it ran up. That's when we got this little crash that happened. Okay, but then after these last couple days, where it started pushing on back up, which is what we expected. Start pulling right back down again to this low. And how low is 1216? 12.16 on the VIX, 12.2 there. What does that really mean? Let me show you again. Let me back out of seasonality right now. Let me show you on a standard chart. I'm gonna back out to weeks. And the low is 11.05 on the VIX since, like 2012. Let me back out even further. And we're going to grab a month. Okay, so the monthly low is like 9.39. That's 2007. Okay, so that's quite a while back. That might even be 2006. That's like December of 2006 before everything happened. We were that low. We've been this low a number of times. Let's see here, but every time it keeps bouncing right off of it. This would be what you would call a support line for implied volatility, usually preceding drops in the market. So I would not be surprised to see the market fall down very soon. We'll see. I don't know what that's going to take to make that happen. But you should not be expecting the market to continue to run up just based on, again, the seasonality and based on how low the VIX is. Now, it can stay low for a while. It can stay high for a while, right? So you don't just go and buy or sell just because the VIX says that implied volatility is low. Right now, it is a very cheap time to buy options. Okay, options have a very, very low cost. So whenever you're looking at stuff like this on a comparison basis, and so options are incredibly cheap. That happens when the market rises, okay, or when the VIX drops. Really, ultimately, people lose fear. They stop hedging. Options get cheaper. So it's a great time to go in and look at potential straddles or strangles, because when the market does blow up, and when I say blow up, I don't mean like, we have a total market meltdown, but, 20, 30, 40-point drop easy. You can catch a nice profit on that. So these are just some of the things that, I'm looking at. I'm looking at seasonality. I'm looking at how low the VIX is and looking at where it may pop up to. So I can expect these drops, these little, pops of where it's going down, going up. And, one way to do this, too, is to, move on down here and change this up to same amount of time, and then throw the S&P on. And then, we can go down and we can look, at up days versus down days. Let's see, let's grab, 2009 to current. We'll grab 2009 to current. It's not days, by the way, this is months. And we can get a lot more specific than this, but you start seeing, the correlation, like whenever the VIX is flying up, the market's going down, okay? When it drops down to a certain low, what happens? See, watch this right here. Let me, like right here, we get down to this low. Do we see any kind of consistency? So right here, about 13, okay? What happens on 13? Now, notice how the market drops. Notice how the VIX rises. It comes on back down, okay, right here in March. And then notice how market drops over the next couple months. The VIX rises. Comes on back down. We get back down. Let's see here. There's 13. So, and then the market drops a little bit, and the VIX rises. Comes on back down. Now, this time we got down to like 13, and the market just ran up for several months. We had some up and down movement, of course. Finally, we got to pull back. And each time it comes back down, it keep having a drop. Now, that's a monthly cycle. We can break it down and get a little bit more specific, looking at a weekly cycle. Okay? And you'll start seeing more and more of the correlation, where you start seeing it drop for a week when it gets extremely low. And then you can drop down even further, and then you can go down to a daily cycle right here. And, we can just, let's get like where we get several times. Okay, so like one time right here we hit it, and we get really, really low, and then the market does drop down for, a bit on us, and you see the VIX rising. Market drops. Okay, it comes on back down. After it, it comes down. What happens? The market rises, and then it comes back down to this level, and then look what happens every day for the next, couple weeks. Market drops down. VIX rises. VIX comes back down. We get back down to about this level. Market goes flat on this one. It doesn't drop. Okay? Still watching to see. Okay, so we got flat, flat, flat. Then finally VIX starts taking off. Market does drop down again. VIX resets itself. Okay, market flies up. VIX flies down. It's correlated. Okay? And then you see the VIX drops back down. And then also the VIX starts flying back up. Guess what? Market starts flying back down. So, and you'll notice, sometimes I'll notice that, one will happen before the other. And usually I would expect the options to move first because hedging starts taking place. So before those releases come out. We go over here, we can look on down, we can see again it drops down, market's rising, that's what it should happen. And, market stays up for a while. And then all of a sudden you start seeing what's the new low. At this point, the new low is 13.5. How do I know that? Because that's when the market starts dropping and the VIX starts rising. See it happen again and again and again. Gets really low. Okay, then all of a sudden we're due again, right here. The VIX flies up and the market flies down. We get back down to that same low that we had before, right down here. Market goes down for a few days, then turns back around. VIX pops up and then comes back around. And then now we're at current pricing. So now we're going to come right in here and we'll just zoom in on the last month. Okay. So now with the last month built in, now you really get to start seeing more and more of the detail. And so we got the VIX going down, we got the market going up. VIX going up, market going down. They basically should be inverse of each other. Might even be easier if I go in and, let's see here, make them candles just so you can see the inverse correlation. And they won't always be perfectly inverse. Every once in a while you're going to get what's called, you get divergence. And that can also be an interesting tell sign, when things are about to, chill out. But anyways, VIX is dropping, market's going up, VIX dropping, market going up, VIX still dropping, market starts going down, VIX keeps dropping. So, and market's going down. That's a warning sign right there. Things are getting choppy. And then we move on forward. Now, where are we at now? Well, this is where I called this, about 2 weeks ago. I'm like, hey, look for the market to start dropping. And as back on, I guess the 14th, about the 14th, I said, hey, look into the, through the, now till about the third week of June, look for the market to drop overall. And so as we're looking at this and the VIX, pops up, market goes down, and then the VIX actually settles down a little bit, market pops up, VIX settles a little bit, market pops back up. All of a sudden the VIX picks back into gear. We had that, nice drop yesterday. And market drops down. Now we got a little bit of a drop in the VIX and sort of a stellar run right now, fundamental run. So it'll be interesting to see how the VIX helps us predict what's going on with Yellen's event today. Is the VIX going to go ahead and turn back around and start flying back up now that it's at such a low? If it does so, will that knock the market right back down, make it give up 20, 30 points before the day's over? Who knows? I mean, you never know what's going to come out of the market. I'm not trying to predict that. I just follow the charts. But I do like to see the correlation in the VIX. It lets me see implied volatility. It lets me know when it's cheap to buy options. This applies to spreads and binaries on Nadex as well. Okay? So if you're doing straddles, you're doing strangles, you're doing calls, you're doing puts, you're doing binaries, you're doing spreads, all of them, the biggest, most important factor in all options is always implied volatility. Always. It's more important than time. Delta, basically, it's more important than gamma, delta, theta, rho is vega. So vega is how much does an option price change based on the change in implied volatility. And so it's very important to know this because when the VIX is higher, it's easier to do premium collection. When the VIX is lower, it's easier to do directional trading. Okay? Now, you can still get spikes on shorter-term contracts because vega will be much higher on a shorter-term contract, like a 1 day or 1 hour. And therefore, if there's a change in implied volatility due to like a news announcement coming out, you'll get that spike. You'll still be able to get that implied volatility. But as far as longer-term options, it's going to be massively important on what you can do and when. But it'll be even easier throughout the normal day to do premium collection trades with a decent amount of distance whenever there is a higher implied volatility, like when you see the VIX up. All right, stay there. We'll be back right after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, we're going back here to the Diagnostic Trading Hour. And we're looking at a few markets. Let's see where everything is at right now. Let me go ahead and get you caught up here in just a minute. Before we do that, though, I want to go through the news and make sure we walk through each one of those trades so you know what you need to be aware for the rest of the week. We already talked about Fed funds meeting coming out. And we also talked about last night. We had the pound report, so we'll go over that, do a quick review of it. And let me see here. I'll pull that up. File, new chart. Let me grab the pound. And I'll throw it over on 10-minute bars. And I'll pull up the little magnet pricing view here. Oh, and I got to update my data series to default 24/7. All right. Don't want to leave out the minutes in between. Okay, so last night we had the report. It was actually pretty quiet leading up to the report. We did have a little bit of movement, though. Let me show you that movement I was talking about. So right here till about 4 o'clock, we got about 17 pips. 20 from high to high to low there, you could say. So that can definitely have a high impact on a iron condor report. Let's look at the straddle. How far did it go? We got 84 pips on the trade. So if you went in, you did the straddle last night on that trade, if you could get the premium on that, then you were a profitable trader. So to review that trade with you again, make sure you understand that. That's the one, again, we called out yesterday. And I go through and I walk out the, how do I put this? I walk through the plan for each one of these individual news reports. And the plan for yesterday was one of two things. Either we're doing a straddle or we're doing a iron condor. But if you do an iron condor, you got to do it like at 4 o'clock for 7. So let's see. What if you would have hopped in at 4 for the 7 o'clock report? Let's see how that would have done for you. 4, and then if we go to 7 p.m., about 36 pips. Would have been profitable by a few bucks. Okay? So it would have worked, which is good. But I mean, you didn't get hit on it. But both plans, whether you did the straddle at midnight or whether you did the iron condor, if you could have got the premium at 4 o'clock, then the trade would have worked out well for you. And the exact details on that I had were straddle trade at midnight. If you could buy the straddle for less than $45 for the 7 a.m. expiration, set a take profit at 70 pips from where the pound dollar is, up or down on the spread is at midnight. Also make sure to factor in where the deviation levels are. You may need to set them tighter. Other potential trade, iron condor, enter at 4 o'clock if you can get in for $55 for 7 o'clock expiration. So that would have put you at actually about a $20 profit if you could have got the iron condor for that rate. And, I doubt you got it. But I wasn't up at that time, so I don't know the pricing then. We have a historical data engine we're building right now to make it really easy to go back and check everything. But 70 pips up, we had 84 pips up, and we also had one deviation right there. See, that's what I'm talking about, the deviation. Like, be really aware of those deviations. And so if you would have got out right before the deviation, if you would have set your take profit there, about 64, so you actually would have got out a little bit earlier than 84 pips. And that would have been wise. I mean, look at what happened. I mean, it just spiked right above it. And then what did it do? It pulled back and then just bounced, and then back down. So I like to take my profits if I can before that one deviation move, just because so often it won't build a spike through it. And it really was a spike and then a failure as it pulled on back down. All right. So that gets us caught up on the news from last night. And then, of course, like I said, we got the Yellen report coming up today that you can use. Let's go ahead and see what other news we have that we can put in our news trading plan. And so, pull these charts out of the way. Tonight, what do we got? Just be aware, really is the only thing I'd say on this. Be aware that there, is an Aussie report at 9. It should not be a major volatility report, but just be aware that it's there. Because it'll cause a 10 or 20 tick move, and it'll be over. The China reports actually have had a decent impact on the Aussie. Haven't got the breakdown yet on those because I got to build in all those different reports into the different news engines that I use that we're building. I got a trader that's really been helping me out. He's an Oracle database engineer, helped me put all this stuff together. But don't have those built in yet. But, again, be aware, 945, that can have an impact on especially like Aussie and yen markets. The China report at 945. So you got a 9 o'clock, be aware on the Aussie, and 945, be aware of the China report on Aussie and yen. When we get back, we'll go into what reports are coming up tomorrow, happening after midnight. Stay right there.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait. Sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, come on back here to the Diagnostic Trading Hour. And just checking out a few different things here, seeing where we're at on the markets and what we got going on. For tomorrow, on the list, the high-impact events, and I'm looking at a few different tools that I use. But really, like, you got the French flash. That pretty much usually has zero impact, but I'd be aware of the 3, the 330, the 4, and the 430. You're basically going to have, well, 3, 330, and 4 are going to be aware of various PMIs coming out. Okay, so you're going to have the French one coming out, the German one, which is the more important one, and the Europe one coming out, which is the less important one because it's a combination of already known information. Okay, so those 3 right there, not a big deal. I would go ahead and just be aware of those events. They could impact if you are trading euro, anything, then they can definitely have that impact. 430, it's a second estimate GDP, meaning we already have the number. Okay, this is just a revision of the numbers, going back through and checking it out. It's not the main quarterly GDP, and it's very easy to confuse the two. I even see sites that will report it. It is a revised GDP. If there is a big revision, it can have a big impact. The most consistent one out of the pound pairs that I like to say, pound franc, pound yen, pound dollar, euro pound, the most consistent one Actually, drop pound franc off there. It's not on Nadex. But pound dollar has the most consistent high impact most recently on that report of usually about 70 pips. But before I tell you to do anything with that, let me go back and see. Yeah, that's a high to low number. It's not a consistent up or down. So I'm really going to call a no trade on that one, honestly. If you want to try to play with it, you're welcome to, but I would say just be aware of it. Be aware of the impact, okay? The impact is a consistent 70 pips average high to low, not from release to high, not from release to low. So maybe 35 up, 35 down, and maybe 70 up, and maybe 70 down. And then the pound dollar, and then about 70% of the time it does actually hit 50 pips, okay? I like higher than 70% averages. So most of the trades I'm calling out that I'm giving you specifically have higher than 70%. Like they're 10 out of 12. Maybe 9 out of 12 is as bad as we get. That's 75%. But 9 out of 12, 10 out of 12, 11 out of 12, that's usually what I'm shooting for on these news events. So this one drops under that 75% mark. Therefore, it's a be aware of it. I want to give you the stats. But since we don't have that consistency on the release to high, release to low, the only stat I can give you is a 70% of the time it breaks 50 pips, and the high to low, not the release to high, not release to low, is 70 pips on the pound dollar. Second estimate GDP at 4:30 a.m. So again, that is a be aware. It is not a actual trade, because obviously with that kind of impact and volatility, if you're in a pound trade, that could dramatically influence you. Looking on over at we're going to have core retail sales, unemployment claims. You can use, using like expected ranges, because it comes out at the same time every week, every Thursday. Look for potential condors or straddles on that. Usually condors are easiest, like going, say, to 10 a.m. So if I was going to do that trade, I'd be looking for either a 9 a.m. or a 10 a.m. expiration. If I use 10 a.m., I need to use 2-hour ranges. If I'm going to use 9 a.m., then I can use 1-hour ranges, like entering at 8 o'clock. Or I could use 9 a.m. and use 2-hour ranges, and I could get in at 7. So 7 to 9, 8 to 9, or 9 to 10. And just put the ranges on there to see if any decent condors or maybe even straddles could exist for the unemployment claim piece itself on really any pair you want. Okay, so euro dollar, pound dollar, whatever. Doesn't really matter. If you want your higher IV trades, you're going to be looking at pound dollar. Pound yen, honestly, is often a better choice, because on the pound yen, you have tighter spreads, meaning the high to low, the box is smaller for the floor and ceiling. Therefore, it limits your risk on an iron condor even further. But often you get the same implied volatility with them. Looking on over at, let's see, we're going to have, like I said, core retail sales and retail sales. Let me see if I got anything for you there. And we'll also look at existing home sales. So we got retail sales as a potential trade. We got unemployment claims. Like I said, you have to check out ranges on that. You're going to have jobless claims, and we got that covered. So retail sales and existing home sales. That's the two reports we want to cover before we wrap up the show. And so I'm going to get those going. Give me just a moment. And I'm trying to look across different currency pairs for you real quick to see what may be the most consistent, high-impact, regular currency pair. I can give you like the cross currencies that have a lot of volatility, but you have to do a lot more complex strategy. And it's a lot easier just to do the lower impact iron condors. So if I'm looking at these, euro dollar looks like a great candidate on some of these reports. And let's see, dollar CAD actually has a higher impact. I'm going to be a little bit curious. We're going to check out euro dollar even on this dollar CAD report. So let's see here. Pull that up. And we're going to see what we get. Let's see what's actually better. So again, this is going to be on the CAD retail sales at 8:30 a.m. tomorrow. And I'm just trying to see if I see a consistency in movement. Like what's the best of the two. All right, dollar CAD hands down. I think all but one had less movement. So I'm talking about 11 a.m. expiration, so giving you plenty of time. You're hopping in like at 8 o'clock on this trade, okay? You could hop in, honestly, as early as 7. So between 7 and 8, you need to be in the trade. You're looking at the 11 o'clock expiration. And if I'm reading through the numbers, you got, and I'm just going to tell you the end result, so we may have its volatility in between. 10 ticks, 10 ticks, 40 ticks, 10 ticks. One of them actually moved 60, but ended at 5 ticks, 25 ticks, 16 ticks, 23 ticks, 4 ticks, 36 ticks, 73. One big mover in there, 22. Okay, so out of that, I mean, really, if you could pull off a 40 tick, 35 even. So I would actually go as low as $35. $35 max profit iron condor on dollar CAD, entering somewhere between 7 and 8 o'clock. And when I say max profit, that's the profit of the lower spread and the profit of the upper spread. The max profit of those two combined, $35 for the 11 a.m. expiration. And you're basically holding them till expiration. Okay? You can set a take profit if you want in there, but if you're at $35, you're going to really be cutting into your profit. So that's completely up to you. It would not have made a massive difference on any of these trades if you would have got out. So even the one that moves 70 pips, I mean, okay, so you had a $35 max profit, you lost $35 net. That's okay. That's 1 out of 12. The other ones, one of them, I mean, there's a 40 pip one. You lost $7. You'll be okay. I hope. And if not, then your problems are bigger. But it's not the trade alone. But going down the list, there's only a couple trades that even exceeded that. So, yeah, $35, in between 7 and 8 for 11 a.m. expiration. And ideally try to get that thing as flat on the line as possible. That's the nice thing if you can go in on those. And let's see if you can pull it off also just on a 10 o'clock. Okay, so let me just go down and run the numbers down real quick and see if that makes any difference. Overall, 10 o'clock works, 10 o'clock works, 10 works. Works just fine. Yeah, 10 is working across the board as well, just as easily. So, all right, so we'll say 10 or 11 expiration, okay? I think you have to use a 10 now that I think about it, because they have like they have the 11 p.m. I think that's where I'm getting it confused. So 7-11, well, no, they have 7-11-3. Let me pull it up. I'm just getting confused right now. Let me show you where I find out what the contract specs are when I don't remember, okay? Right here, we'll go into markets. We'll go to Forex. We're going to go on over here to the bull spread contract specs on FX. We're going to scroll on down, and we're going to find the spreads. We can find also any currency pair we're looking for that they have tradability on, such as dollar CAD. And they're going to give us they're going to give us a Sunday to Thursday, and 11 o'clock, a 7 a.m., and a 3 p.m. Yeah, I don't know where I was getting that from. Okay, so I'm going to back out the trade. When we got 10 a.m., 10 a.m. works. For everything I just told you, getting in at 8 a.m., okay, that'd be the requirement, so sorry, I got to clean that up for you a little bit. 8 a.m. for 10 a.m. expiration. But what I want to see is, can I do a daily on this? Okay? So meaning, can I do a 3 o'clock expiration? What would happen if I did dollar CAD on the day that the dollar CAD retail sales comes out? If I would have done that for the last 12 months, what's the average move? Is it better? Is it worse? And let's give myself a lot more time, a lot more premium, a lot easier to potentially get a trade filled on that. Looking at it, last report, literally we ended at 0 pips, so it would have been 100% profit. Let's see here. All right, so 0, we got 15. We got 44 versus like what would have been 34, okay? We got 27 versus 10, and we got, let's see, right over here, we got 15 versus 15, in the same spot. We got 25 versus 25. We got 11 versus 11. I mean, you're talking the exact, like 11 o'clock and 3 o'clock, the exact same result, which isn't a big surprise. It's sort of how Forex works. It sort of goes flat after 11. We got 21 versus 23. We have 10 versus 4. You have 52 versus, like, 42. Okay? We got 55 versus 73. It actually worked out better on that one. That was a bigger move. And on one report, there is one report where it would have got you. It moved 65 versus 25. Okay? So most of the reports, the net is either the same or a little bit better in most cases. There's one report where it moved a little bit more against you. And by a little bit more, I mean instead of making $15 on the trade, you lost 30. Okay? So minimum, I would say, $40 minimum profit. So we have two trades. We have an 8 a.m. to 10 a.m., $35 maximum profit. Get it at 8 o'clock. We got a 7 a.m. to 3 p.m. Okay, and on that one, I'm going to say you want at least $40 max profit between the two. And that trade looks like it will work really, really well, or it has at least worked really well over the past 12 months. Okay, so two different ones you can do: 7 to 3. You can still do it at 8 to 3, but just the advantage is you get another hour of premium built in. So 7 to 3 or 8 to 10. $35 on the 8 to 10, $40 or more on the 7 to 3 p.m. And there is your dollar CAD trade for tomorrow. What else do we have coming up? Like I said, the pound one worked out great yesterday, so hopefully some of y'all will be able to take advantage of that dollar CAD. We also have existing home sales. So let's check out what do we got here on existing home sales we might be able to use for the 10 a.m. report. Let's see here. Existing home sales. Last report for... Now this report comes out a little bit later at 10. So I guess I could look at 12, try to give us a little bit of time in there, but it comes out at 10, we're not going to be able to get 12. So we're going to have to get in at like 9 something. All right, we'll just base it on a 9 o'clock entry. So we're getting about 25 pips for a 11 o'clock expiration. Okay. And right now I'm looking at euro dollar. Okay, the euro dollar. 3 o'clock, by the way, would have worked out just as well. See, 3 o'clock worked out well. I'm actually comparing. I'll probably start doing this more and more, is comparing end of day. Because you'd be surprised how many times end of day works out just as well as doing a short-term one. And at least you get more premium. Because you got, hours of additional premium in there. So far, in nearly every case, I'm looking at... I'm trying to see if there's any major consistent exceptions. Nope. 3 o'clock is awesome. So, euro dollar, I'm looking for $35. Okay? There's only one time where I would have got hit on this trade hard than last year. At $35 in maximum profit, enter at 7 for 3 o'clock Iron Condor, combined max profit between the two. Put those two together, you got the trade. So we got a euro dollar and a dollar CAD, both based on existing home sales and retail sales. Reports coming out tomorrow. Plus, you got your natural gas storage. Stay right there. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome back here to the Diagnostic Trading Hour. I got a caller. I got John from Miami. How's it going, John?
Hey, Darrell. How are you, man?
Hey, doing great. How can I help you out?
Darrell, quick question. Yeah, quick question, man. I just started listening to you a few days ago. Your box analyzer, what is that best for? Is that just for trading Nadex, or, for example, if I trade futures, can I use that?
The box spread analyzer has 2 purposes for you. One, you have the deviation levels that you can use for futures, okay? We got futures and Forex, and this is basically telling you where the market's going to go to at any given point, and it's insanely accurate. I mean, here's oil right now, and it's right at 1 deviation and turning around. And it does it day after day after day. The other advantage is you can hedge, okay, your futures. And this is actually my favorite strategy on Nadex, is you can go in, and I can say, hey, I want to trade the S&P, and I want to go whatever direction. Or maybe there's about to be a Fed minutes report coming out. I'm up. I don't want to get out. I don't want to miss out if there's a big run up, but I also don't want to get slammed if the thing goes against me, right? And so I can go in here, and I can find a low-risk spread really quick to hedge off my position and go, you know what, I'll risk a couple points, right there, and that'll, get me through, like this report or whatever. So you can go in and you can find really low-risk spreads really quick to help you put on positions. Basically, think about like, I don't know if you ever traded calls or puts, like on stocks, like a married call or married put to hedge a position. Well, with spreads, you can do the same thing to lower your risk. So you can have a 2-point risk on S&P, but have a 10-point stop loss.
I see.
Meaning I'm only risking $100, but I have a $500 stop loss.
Right.
So that's going to be your big edge. Yeah, and you could trade corn, soybeans, oil, natural gas, ES. You got Russell, Dow, NASDAQ. All that.
And in your box analyzer, does it also have the screen? I see sometimes that you do the price magnets.
No, it doesn't have the price magnets. It has the deviation magnets, deviation levels. And price magnets, I manually plot out. But if you watch the shows, I show you how I manually plot them out.
I see. And my last question, Darrell, do you have like a class that we can take to use the box analyzer correct and learn the price magnets? And like for the price magnets, like when you do the price magnets or the expected volume, are you using your own software, or is that what software are you using for that?
Well, for price magnets, I don't use expected volume, because on price magnets, you just basically have to look at what is the volume levels that are high. I am actually looking at doing a workshop on that. I've had several people ask for it lately, and they're like, hey, could you just do like a whole specialized training just on how to do magnets? So I am looking at doing basically a magnet price workshop, because, I mean, as you see, I guess if you watched the show a few times, like they're insanely accurate.
Yes. No,
so they can help you see oscillation points. And now for the box spread scanner itself, we actually do have tutorials built right into the scanner itself. So you can go over here, and it tells you like exactly how to use it.
Okay, and the expected volume, are you using the same software to do the expected volume?
So that's a custom software I built so far. I haven't released that out over on TFNN yet, so working on that.
Okay, see. Okay.
But yeah, I am working on getting that out there. And what I may end up doing is I have built in a feature right now. I may end up making like a downloadable report for the week, and because it's based on hour. And so like what I can do, like right now, I can go over here and I can hit a button. And now I have the expected volume for every hour of the day for the Dow for the next 7 days. So I am looking at making a report that basically tells you by hour, now I'll make it cleaner than this, but by hour, by day of week, what is the expected volume? And but I want to make it where it's automated for you, but at least that would show you by hour, by day of week. And so we're looking at potentially building that into the scanner itself to where it will actually tell you when any market is exceeding expected volume for that hour.
Okay, and when do you expect having that workshop?
I'm going to have to talk to Tommy about it, but probably here in June is the time frame we're looking at. Yeah, but thanks for calling in, and I look forward to seeing you there.
Thank you, Darrell. Appreciate it.
You bet. All right, folks, y'all have a great day. I will see you tomorrow right here on the Diagnostic Trading Hour.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.